Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 25th, 2022. Hope you're all doing well. In today's segment, let's take a look at how to create a diversified portfolio. Look, market can go up and down, but if you have a diversified portfolio, you can really make it on the top. So with that, let's jump in and get started. Look, the data that you're looking at comes from various services, right from Finviz to TradingView, StockRover, and so on and so forth. So with that, let's jump in and get started. The reason I pulled this spreadsheet together is in a single website, sometimes it's very hard to get all the data. So that's why I pulled a quick spreadsheet so we can walk through the criteria that I use to create a diversified portfolio. So with that, let's jump in and get started. Look, as you look through here, we got the top portion here. This will keep changing, for every row that I select. So this will keep changing. Just keep that in mind. So as an example, if I click on UNH here, the values you see on the top will change for UNH. So with that, I'll jump in and get started. Look, first we'll look at sector by sector. I will go all the way here. I got a filter with all the sector. Let's start with the top sector here. Let's start with the basic materials. Let's go into basic materials and see how many stocks we have. Look, in the basic materials, I'm looking at non-penny stocks here. Look, we got about 136 stocks in the basic materials, as you can see here. So what we'll do now is we'll look at apply some criteria to look at great stocks in the basic materials. So look, I want to make sure the sales growth itself is good here. So for this, I will use sales growth 5 years is greater than 0. I would not go to sales growth 5 years, because look, some companies, as you can see here, we got Corteva, great company. It's not 5-year-old yet. So with that, let's go into 1 year here. Let's make sure sales growth in 1 year is greater than 0 here. Let's do that here and say select greater than 0. So we look at the companies that are growing. Look, now we are down from 136 to 87 stocks, as you can see here. Now we can apply more criteria. So I want to make sure the net margin for these companies that I'm looking at, I want them to be more than 0. I want the positive net margin companies. So let's go here and say net margin and greater than 0. Look, now we are down from 87 to 67 here. We removed 20 companies here. So now we can look at other criteria here. Now we got debt load. Some companies have got very high debt load here. I don't want to look at very high debt load companies. As you scan through here in the basic material, typically we got a little bit higher debt load, but I want to eliminate any company with the debt load. Say more than 2 is a big no-no for me. Let's say debt load, debt to equity here is really less than 2. Let's go with that criteria here. All right, so we removed some more companies here. Now we are left with the 67 companies, as you can see here. So let's keep going here, and we can look at a few more things here. Current ratio. Current ratio is current assets by current liabilities, as many of you know here. So it looks like some companies have got a little bit lower current ratio, but I know some of these companies are great, so I will leave this as it is here and go from there. And then you got trading volume. Some companies have got lower trading volume, but for this criteria, let's keep the trading volume as it is. And let's keep going here. Important thing for the fundamental investors is earnings per share. This tells you if the company is making money. Look, we got all these companies which have earnings per share positive here. I would say, just to be more careful here, I would say earnings per share more than 1, so that way we knock out some more companies here. All right, so now we have earnings per share more than 1 here. Look, we are down to 61 stocks here, and now we can keep looking further here. We got price to sales ratio here. typically you don't want too high price to sale ratio here. So we got some of these very high price to sales ratio. I would say price to sales ratio less than I would say less than 10 is good enough here. Let's start with less than 10 here. All right, so now we are down to, let's see here, we are down to 59 stocks here, and then you can look at more criteria to build them down here. Look, we got more criteria here. We got performance, as you can scan through here. Many of these companies have done very well here from a performance perspective. And we can also look at, let's see here, we got sales, gross margin all taken care of here. Let's keep going. And look, we got return. Look, many of these companies, I love stocks like Lindy here. Look at Lindy. Lindy has done great here. It's done, look, in 5 years, it's done 133%. In 10 years, it's done 271%. And look, this year, it's done negative 3% in 1 year. But 3 years is done great. It's a good company. So I love this company. It's a great one here. And then if you want to do a good from a performance perspective, look at Air Product Partners. Look, it's got a great performance here. Look, all the way from 1 year to 10 year, great performance here. It's a great one to buy here. And let's keep going here. Look, we got free cash flow here. I love companies with a free cash flow here. And we got, look, Albemarle has got a negative free cash flow here. Probably I would not go with that for my long-term portfolio. I will say free cash flow here. I would say positive here. So that way we get, look, great stock with a positive free cash flow here. Let's say greater than 0 here. So we eliminate few stocks. All right, so we got positive free cash flow companies, and look, we got debt. Total debt here, and it's very important for the companies to grow. As you can see here, we got some companies with a negative growth this year, and we got this year revenue growth. I would focus more on the next year here. Look, we got next year EPS growth. I would not want to look at next year EPS growth negative companies here. Instead, I want companies with the next year EPS growth positive. I would go here and let's quickly scan through this here. I would say greater than 0 here, and go from there. Let's say greater than or equal to 0. So that way we eliminate some more stocks here. Look at the great ones here. Look, we are down to 20 stock in the basic materials. Let's keep looking here. And then you got your revenue growth next year. I want the revenue growth next year also to be positive here. So you can go here and say revenue growth next year, and you can say greater than or equal to 0. Or let's just say 0 here. That's good enough. All right, so now we're down to 13 companies in the basic material stocks here. Now look, we got overall score. Overall score is computed by stockrover.com, which is a great website for the folks who want to look at the fundamental analysis. What I would do now is I don't want to really invest in stock with a low overall score here. Look, we got CCL and PPG, low overall score. I would want overall score to be at least say above 30 or so that way I get some good stocks here. So I would off the bat say overall score here and more than 30 here. All right, so now we are down to just 9 stocks in the basic materials here. We're in a great start. Look, we got here a value score, looks at the valuation, and we got growth score, quality score. I think all these companies have got great scores here. I'm not too much worried here. And then we got sentiment here. Look, we got Summit right now from a sentiment perspective. It's got some negative sentiment, as you can see here, but that's fine. Sentiments keeps changing. We don't need to worry. And as you scan through here, we got a Morningstar rating here. And look, from a Morningstar rating perspective, we got financial growth and profitability. And we got 2 stocks with the F grade here. When it comes to profitability, I would really knock them off here and go with the profitability at least A, B, C, D, and go from there. Let's go here and say profitability. and I'll knock off F here, and now we look at profitable companies. Look, we are now into just 7 stocks here, and let's keep going here. Then we got industry here, and before I go to industry here, also keep a watch on Altman Z score and Piotrowski F score. These are the great scores here. They tell you how stable are the financials of the company. Look, anytime you see Altman Z score above, say, about 2 or so, those are the great companies here. Look, all these companies have got Altman Z score nice and high. Higher the better. We could even eliminate this one right here, Summit here, but let's keep going. And we got Piotrowski F score. I would really love higher Piotrowski F score, but I think all this will go very well. VMC, Vulcan, as you can see here, actually Corteva has got a little bit lower score here from a Piotrowski F score perspective. I know it's a great company. Let's keep it and keep going. And look, we got a few more here. We got, profitability and so on and so forth here. What I will do is, for the folks who want to buy or into dividend here, look, we got dividend here. And, keep watching here. We got SQM paying a nice dividend, as you can see here. And let's actually go here. All right, so SQM, pays nice dividend. If you're into dividend, you could go into stocks like SQM here. You could also go into APD. APD also pays a great dividend here. And we got few more things, dividend ratio and so on and so forth here. And we got debt. Some companies take so much debt here, they pay a lot of interest for the debt, but these companies are fiscally responsible. They don't have too much debt, as you can see here. I'm okay with the this level of interest rate payment here. They're not paying too much interest rate here. And we got a few more things here, and I think that's good enough here. So what we'll do is really, out of about 120, 130 companies, these companies are good here. And what I'll do is I'll go all the way back here, and let's look at the performance of these companies here. Look, from a performance perspective, Lindy, it's a great one. I'll mark it. We'll add it to our portfolio here. Lindy is a good one. It's a great one to have in a portfolio. APD is a great one. Look at the performance here. I would add this one also to the portfolio. And then we got here a few more. We got Corteva. Corteva has done 55% in 2 years. It's a great company. I would add that to portfolio also. Next, we got a choice. We got VMC, which is Vulcan, as many of you know here. Vulcan has done great in 10 years. It's done good in, say, 2 years also. 1 year is struggling a little bit with all this infrastructure bill coming up here. This company can take advantage. I would select this one also here. And then we got a few more here. We got SQM. SQM is great play here on electric vehicles here. It's got lithium, as many of you know here. So I would look at the performance in 10 years. It's done great. I would add this also to our list here. And then you got Livent. Livent has not done great. I would not put it in my list here. 2 years, 8% negative right now. And Summit Materials, let's see here, it's done negative 25%. I would go with these 4 companies here. So in a nutshell here, look, out of a lot of companies here, if I put my filter here in basic materials, if you are investing, look at these 4 companies here. I think they would do very well as you go forward. All right, now let's keep going. We selected successfully in the basic materials area. Now our filter criteria is set. Now what we'll do is we'll look at other areas. Instead of basic materials here, we'll go into next sector here. Next sector, as you can see here, it will get easier. We'll go into communication services. This is where we got companies like Facebook and Google and so on and so forth. Since our criteria is all set here, our life is a little bit easier. As you see here, we got great companies. This is sorted by market cap, as you can see here. At the top, we got Google. Google is one of my favorite company. Then you got Disney and BCE, Chinese company Baidu here, and so on and so forth. And what we'll do is we'll keep looking here and see if we need to tweak something here. Look, we got few companies here. I don't like too high debt level here, especially in the communication sector. We got BCE here. Let's keep watching the performance. Look, from a performance perspective, BCE has done, let's see here, in 10 years, 68%, not too bad. But we have got better companies here, so I would say we can keep Google. Google is a good one here. And if you look through Disney here, keep watching Disney. Disney has done 94% in 10 years, but off late, look at the performance here, not great. So in your long term, if you have really very long term horizon, I would add Disney. Otherwise, I would probably skip Disney for now, given it's struggling right now. But if you have very high level, very long term perspective, you could keep Disney on your watch list here. And then you got BCE. And look, I love this EA here, Electronic Arts. It's struggling off late. Look at that performance of Electronic Arts. Done great in 10 years, done great, okay, in 5 years. But look, off late performance is not great here. I would look at a little more steady Eddie type names here. Got Siri. And we got one more here, we got NYT, New York Times. Looks like performance is pretty okay here. And then you got CCOI. Looks like it's got a nice performance. If you look through here, 1 year, it's negative 22%. And look, we got a few more here, but I like Google. But by looking at this year, I would also look at probably adding Disney into the portfolio. And we could also look at, let's see here. We got EA. EA is struggling right now. It's a great company. We could add EA also into the portfolio and go with this criteria and go from there. And you can also look at other things here. We got total debt, as you can see here, operating cash flow. Look at the cash here. We got Google is a cash cow, $116 billion cash. Even this one, Disney is a great one here. Baidu has some cash. These Chinese companies, it's not safe to put in a long-term portfolio. You can trade them, but not great to be in a long-term portfolio. So with that, let's go with this here and look at next sector here and go from there. All right, next sector, let's jump in here and look at consumer cyclical. As many of you know, consumer cyclical, they tend to do well at times. So let's see here. We got great names here. We got Alibaba, TJX is sorted by market capitalization, as you can see here. As you scan through here, let's keep going here and look at performance here. Look, Alibaba has not done well in last 5 years, so I would not put it in my long-term portfolio. Instead, TJX is a good one here. TJX, look, it's been doing well, even 1 year positive, 2 year positive, and 10 year also positive. I would put TJX in my long-term portfolio. And then you got a few more Chinese names I would not add to my portfolio here. CMG, Chipotle Mexican Grill, great one here. I would add this one to portfolio here. And then got Rosstor. Rosstor is a great one here. The companies who want to offload their merchandise and reduce the inventory, they basically go to Rosstor and sell it there. Rosstor is a great one. It's a keeper. And then you got a few more here. Genuine Auto Parts here has done pretty okay here. It's a good one. You could you could add this also to the portfolio here. And look, we got ACMR. ACMR, as you scan through the performance, not great. I would not go there. Darden is a great one here. It's done great. It's a restaurant play here. Look, Darden is almost same as almost done very well like CMG here. We can add this here, but we do not need two companies here in the restaurant business. But let's add now. We can reduce later. And then we got a few more here. Look, we got MGM Resorts, a great one here. Look at the performance. It's done well, but 1 year it struggled, as you can see here. And we got a few more here. AAP, Advanced Auto Parts. Again, we got GPC there, doing much better. AAP is also a great one here. I would probably add AAP here. and go from there. Look, we are done with the this one also here, consumer cyclical done. And now what we'll go into is really go into next sector here and select next sector, and that will be the consumer defensive. All right, so in the consumer defensive here, let's keep going. All right. Takes a while to select. That's good. Okay, we got consumer defensive here. We'll apply the same criteria as you scan through here. I love the companies growing nicely here. Look at the sales growth in some of these companies. Because we got a lot of these companies here, let's do one thing. Let's sales growth here instead of more than 0% here. I would change this to say 10% or even 5%. Let's start with companies growing more than 5% top line. And now let's see here, we got few companies growing nicely here. We will now shortlist here. And for shortlisting, let's look at the performance here. Look, from a 10-year performance perspective, PepsiCo, Mondelez, and even KDP, Keurig has done great here. I would add some of these things to portfolio here. Look, PepsiCo is a keeper. Let's add that. Mondelez is also a great one here. I would add this one also here. KDP has done great. Look at this performance here. I would add KDP also to the portfolio. And you got Hershey's, again, great one here. Folks want to eat chocolate. It's a great one here. And even Kroger, look at the performance of Kroger here. It's done great. You could add Kroger also. We got a lot of companies here. We got to be a little more selective. And look, we got a few more here. 2 years, some of these companies have struggled, as you can see here. And we got Performance Group. And let's see here, 246 here, Darling Ingredients. That's also great one. Tyson has been struggling off late, as many of you know here. And we got a few more here. We got a few more, let's see here, Flowers. I think probably we'll add Darling here, and that should be good enough when it comes to consumer defensive here. We got a few more. We don't need to worry about those right now. All right, let's go with this and go to the next one here. Let's go in here and look at, let's see here. All right, so now next is energy. As many of you know, energy has been performing great this year. Let's look at some great energy names here. Look, we got energy names here right from the top here, Enbridge Energy. And let's look at the performance of these companies here. All right, so Enbridge Energy, for the folks who want dividend, they could buy Enbridge. Since there are better plays here, then Enbridge will go into better ones here. Look, as you scan through here, we got some of my favorite stocks here. Keep watching the performance in 2 year. Look, we got Devon Energy, which is one of my favorite stock here. I would be keeping this Devon Energy. And we got a few more here. Look, we got Devon. Even EOG, I love EOG. It's a small and mighty company. I love this company. A great one here. And we got a few more here. Look, we got Devon. That's good. Look at this one here. VET, small company. I would not go in here. And we got a few more here. We got ARLP, and we got ROCC, and so on. So for a little bit smaller companies, but they've done well in 2 years. But if you look through the 5-year and 10-year here, Devon has done great, and EOG is good, and EPD, Enterprise Product Partners, is also a great company here. You could select this one also, but let's go with a little bit better companies. Look, ET, Energy Transfer Partners, you could go with this one also. Look at the nice performance here. In 10 years, it's been doing well in 3 years also, as you can see here. And we got a few more here. I think that should be good enough for now here. And, look, because I've done because of some of the criteria that we used here, I think let's see here. If we reduce here sales growth here, and instead of 0.05, we say 0.01 here, we might see a few more names popping up here. All right. So, some of the companies, especially in the energy business, they have a little bit higher debt here. Let's say here debt, say less than 5 here, because some of the big companies like ExxonMobil and Chevron, they did not make the list here because probably they have a little bit higher debt load. Let's go back here and reduce the less than 10 here, and let's look at that here. All right. Look, we got Enbridge and so on and so forth here. Net margin, debt to equity, that's good. And 1 year sales, probably net margin, we got more than 0. I think that should be good enough. I think we'll go with these companies here and look at a few more. I'm trying to see why stocks like, ExxonMobil and Chevron didn't make it. Most probably it's because one of these criteria did not satisfy. That's good. We are good with the Devon and Energy Transfer Partners. But if you want to add Chevron or ExxonMobil, though they're also great companies. All right, so with that, let's jump in here, look at the next criteria here, and look at the next sector. All right, so let's jump in here and look at the sector. And we are from energy, we are going to financials here. And let's look at financials. All right, so these are the great financial companies, as you can see here. And we can turn back this debt to equity ratio here and make it less than 5. We don't want to be looking at very high debt load companies. All right, and sales growth also, I will increase it here, make it more than 5% sales growth, so that way we don't look at very low sales growth companies. All right, so we got great companies here. Let's go in here and look at how they have done. Look, we got Charles Schwab has done great. Look at the performance here. It's one of those great companies, continue to do very well in the financial and brokerage industry. I would add this one to the portfolio here. And then we got a few more here as you scan through here. We got TD, AXP. AXP is a great one here. I love this company. Also very steady Eddie type company here. We can add AXP to the portfolio also. And as you scan through here, you got PayPal. I would not add PayPal to my portfolio at this time. It's struggling. PNC is a good one here. And we got ICE, Intercontinental. Intercontinental is a great one here. 1 year negative 24. Let's look at some better place here. And look, we got one right here, AJG Arthur. It's a good company. 1 year it's done 13%. I would add AJG here. It's a good one here. And as you scan through here, we got a few more here. We got M&T Bank, as you can see here, and a few more here. So what we do is here is probably some of these companies got a little more higher debt load here. We can just increase this slightly and make it less than 10. We might see a few more names. All right, so I think we got some great companies here, and we got a few more names here. I think we should stick with these names here. I'm trying to see why some of the big banks did not show up here. I think probably because their financials are not great. But if you love stocks like Chinese stocks, you could go with the QFin. It's a good company, as many of you know here. All right, so with that, let's actually try to see here. We got net margin, debt to equity. That's good here. let's go into next industry here and look at a few more names here. All right, so we are going into healthcare right now. Let's see what great healthcare stocks we can add to our portfolio. Look, we got great ones here. I love stocks like UNH. UNH is a steady Eddie company. It's been doing great. Look at the performance of UNH here. Look at this nice 1026%. I would add UNH to my portfolio in a heartbeat. I love this company. It's a great one here. And then you got a few more here. Novo. Novo is a great company here. Look at the nice performance. Even in 1 year, it's done positive. Novo is a keeper. It's a great one here. And then you got a few more here. Thermo Fisher, it's a great 1 year. It's a life science company, as many of you know here. 1 year negative 17%, but it's a long term. It's a keeper. I would add TMO to the portfolio also. And then we got a few more here as we scan through here. We got a few great companies. Keep watching the performance here. We got even this small company here, not small anymore, ELV. Look at the performance here. It's done great. ELV, Sigma is a good one here. I would look at one of these companies here and probably add ELV to the portfolio and keep watching. We got animal health here. Zoetis, it's a great one here. It's done pretty okay here. And we got a few more. Humana is a great one here. As we look through Humana here, look, it's done great. I would add this one also to my portfolio. It's a great insurance company, health insurance company. And then we got a few more as we scan through here. We got Horizon. I think this got acquired already. And we've got a few more down the line here. Look at the performance of some of these companies. Neurocrine, look at the performance, great performance here. You could look at this one also here. You can add to the portfolio. And we've got a few more with the great performance, as you can see here. We got GMed, again a great performance, and Exelixis, okay performance. Let's go with this here. Let's look at these companies and add to our portfolio. All right, next let's go in here and look at the next sector. All right, so we're all the way to healthcare. A few more to go here. Let's go to industrials and look at some great industrials. All right, so look, we got great industrial companies here, starting with the UNP. I love this company. It's a great railroad company. All aboard. So I would add UNP to my diversified portfolio. It's a great one. And look, we got a few more here. CNI, waste management. Waste management is a keeper. It's a great company. You could add to your portfolio. And we got Norfolk Southern, also a great company here. Performance is even better than UNP here. I can add this to the portfolio. You could pick one of these two because both are into railroads. Both NSC and UNP both are into railroads. And then you got a few more here. FedEx, Thomson Reuters, and so on and so forth here. Look, I love Paychex here. It's a steady Eddie grower here. You could add Paychex to your portfolio. Also pay some nice dividend. And RSG, because we added waste management, you don't need to add this one also, but you could choose one of these here. RSG is also a good player when it comes to the waste management area. And you got here Train. Train is one of my favorite stocks here. Nice industrial. Look at that nice performance here. Steady Eddie company. You could add Train to your portfolio. And we got a few more here. At this time, it's really, we don't want to add all the stocks here. I love this one. Waste management is a great stock. You could add this one also. Cummins is also a great company, great industrial. Look at that nice, nice 10-year performance. It's a great one to add also. And we got a few more here. Look, we got URI, United Rental. This seems to be doing very well, especially if folks want to rent their equipment. This is a good cyclical play here. And we got a few more here, as we see here. We got Quanta. It's a great one here. Dover also has done pretty okay, as you can see here. And we got this one great here, Booz Allen Hamilton here. Look at the nice performance here in 10 years. It's a defense type information technology stock. It's a great one. And we got a few more, as you see here. Keep watching the 10-year performance. Some stocks have done great in 10 years. All right, I think that should be good enough. Let's look at the next sector here. And go from there. All right, so we are up to industrials right now. Let's keep going and look at the next one here. Let's look at real estate. We got 2 more to go. We're almost there. All right, these are the great real estate companies here, and let's keep going to the performance here. Look, we got from a real estate perspective, we got great companies. We got Equinix here. They're into data center type REIT. It's a good one here. 10 years they've done great, but off late they're struggling slightly, as you can see here, but still it's a keeper. I would add EQIX to your portfolio for the long term, and keep watching here. 5-year, 10-year. Got SUS Suncommon. Look, at 1 year it's fell off, but it's a good company. It's done great. You could add this one also to your portfolio here. It's a good one here. And we got a few more. Keep watching the performance as usual here. We got UDR, and look, ELS Equity Lifestyle has done great. We could add Equity Lifestyle also to your portfolio here, and keep watching. We got a few more. Lamar, Cube, LSI, and we got a few more, as you can see here. But I think this is good enough for us here to begin with. Here I would go with these to begin with, and keep watching 1 year also. Look, Kimco, it's pretty okay here, but look, long term is not great here. UDR, it's also okay, but let's go with these names here. They seem to be doing pretty well here. All right, let's keep going here and look at next few ones here. All right, so let's go all the way here. Let's go to technology here. Technology is a great one, and most of these technology names have come down to earth big time. Look, because of our criteria here, we got a great technology stocks here. Starting with Avago or Broadcom here. Broadcom is a great stock here, and we got a few more, as you can see here. And what we'll do is we'll look at many of these names here. Look, keep watching the performance here. We got many of these names here. We got sales growth, nice sales growth. We got net margin, and all these filters selected. You don't see Apple here, mainly because Apple, they have too much debt on the balance sheet. That's why it must be flunking the debt test here. I would go with Avago or Broadcom here. Broadcom is a great stock, and as you scan through here, look at the performance of Broadcom here. Look at that nice performance. In 10 years it's done 2,182 here. I would love Avago or Broadcom here. This is a keeper. I would add this to my portfolio here. And we got Accenture here. Accenture is also a great one here. Look at the performance, 374% here. It's a good one here. But as you scan through here, we got CRM, which is Mark Benioff's company. And we got Intuit, SAP, and so on and so forth. Look, Intuit has been doing pretty well, maker of TurboTax. I would add probably this one to my my list here. And Sony is a great one here. Look, 650% in last 10 years. I would probably add Sony to my portfolio also. Good one here. And look, we got a few more here. We got Synopsys, one of my favorite company, has done great. Keeps going. It's a good one here. And we got Arista Network. Arista Network is also a good one here. Look, it's doing pretty well in last 5 years. Even in 1 year, as you scan through here, negative 16%. This is a keeper with the CEO Jayshree Ullal doing great. And you got T Connectivity or TEL, as you can see here. This one has been doing great. But let's probably look at better companies, as we can see here. I love this one. It's also a great company here. Keysight Technologies, I think this is a great one here. This is a keeper. You could add this to your portfolio here. And then you got a few more EPAM and so on and so forth here. And keep watching the performance here. EPAM seems to be doing pretty well here. You can add EPAM to your long-term portfolio. And keep watching. We got a few more names here. Keep watching the 10-year performance. Many of them have done well. Look, we got Jack Henry. Jack Henry has done pretty good in 10 years. And even right now, it's not doing bad. Look at the performance, up 7% for the year. You could add Jack Henry and Associates. And we got a few more names, as you can see here. It's a big list here. I would probably go with these. And I also like Accenture here. You could wait slightly and grab some Accenture. It's also a great one to buy. All right, let's go with these names here and go into next sector. All right, so let's go all the way here and look at next sector, which is utilities. We're almost there. All right, so we got utilities right now. We got a few names as you can see here, and as usual, keep watching the performance here. L&T has done great, and PAM, which is Pampa, has done great also. Looks like Pampa is struggling right in 5 years, but in 10 years it's done great. We got FV, First Energy. First Energy seems to be steady Eddie, as you can see here. It's done great in 1 year. I would add First Energy to my portfolio here, just $42 stock here. Then you got L&T. L&T is also pretty okay here, but Pampa has done great, as you can see here. Pampa is a little bit lower market cap, 3 billion. So I would probably not add to my long-term portfolio because of the lower market cap here. A little bit riskier, but we got L&T. You could probably look at this L&T and add that to your portfolio. All right, so look, we have done it. Now what we'll do is we'll just look at the selected companies and see how to build a portfolio using them. All right, so let's look at just the selected companies here, and we just mark them as X. These are our companies. It's really multi-sector portfolio here. Let's go all the way top. All right, look, out of 2,500 companies, we just have a handful now, 54 companies for your diversified portfolio, depending on what you want to do. For example, we got a few great names here. If you don't want two companies in the same sector, you could remove some of them here. You could go all the way back here and look at some of these companies. Look, we got sectors right here. We got some duplication from a sector perspective, depending on your taste here. For example, if you want one railroad, I would go with Union Pacific. I would not add other companies like the Norfolk. And if you want just one waste management stock, I would just go with the waste management or WM here. I would not add other names here. So that's why the moment you have this list here, you could trim them down per your requirement and go from there. Just to sum it up here, this is sorted by market cap, as you can see here. We got just 54 names here. Look, we got Google, UNH, NBO, and so on and so forth up to Mondelez here in one list here. And as I scroll down here, we can get the next set of stocks here. Look, we got next set of stocks right here. We got ELV, AXP, all the way down to PAYX, Paychex, one of my favorite company here. Even Cortiva is a great one here. And finally, we got next set of names right here. Look, we got Ross, Train is a great company, as many of you know here, and EA, Keysight, again a great one here. And we got few more names, as you can see here. So this is how you build balanced portfolio as you go into 2023. So with that, thank you very much. Happy investing and trading. Please subscribe.